Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome back to the analysis of the euro currency. Let's start as usual from the daily time frame. Here we see that almost nothing has happened during the previous session despite the FOMC meeting and the Federal Reserve announcement. So we see that market still stands, in fact, in the range of that thrusting bar, since although we see that shadows and some price was beyond the scope, beyond the upper and lower border of this candle, but close price stands inside of it. Also, despite the fact that market stands currently above the weekly pivot point, and in general we could treat it as the bullish sentiment on the market, you can see that market is struggling with this confluence resistance on the daily time frame and couldn't break it till current moment stands right here. In general, this price action, it's very unstable and a bit sophisticated to analyze. And here you see on the 4-hour time frame why I think so. Take a look at that daily time frame trend still holds bullish. On the 4-hour time frame is our major picture today. First of all, take a look at this pattern. That is the bearish wedge is forming. So you can see this is counter trend move. It's move down, retracement. It's very choppy in price action. It's not very common for the development of the fast move to the upside. Also, you can see the divergence with the MACD indicator that is developing, we could say, with the current wedge. That is very common moment when the divergence becomes a company of the wedge patterns. Inside of the wedge we could see two butterflies side by side. That is the first butterfly after which we say that probably retracements could come. That has happened. That is in our entry point where we enter on the long side of the market. Market continue to move to the upside. Now take a look at that area. It's around 132.35, 132.60 area. It's slightly above the current price action. What we see, first of all, that is the 1618 extension of the previous butterfly, because you could see that market hasn't quite reached this level. Second, slightly higher stands the 127 extension of that more recent butterfly pattern. Also, I do not have it on this chart, but if you will draw the Fibonacci extension from that swing, A, B, C bottom, you'll see that 100% extension, the completement of that ABCD pattern stands right here. Taking an account of the leg angle, the slope of the legs, you can see that AB leg is much steeper than BC. That adds more resistance, because when the CD leg is flatter than the AB leg, there is a great probability that some retracement or even deep retracement could come on the completion point of the ABCD pattern. That's why I suppose that current trading session will be the day of expectation. Because if you have entered long here, you could act twofold. First of all, you could just take the profit right here, or second way is take profit partially and contract, move your stop loss to above, right below this swing low. I suppose this will be normal. Because if bulls are still in charge, I prefer to see the failure of the wedge and the failure of the butterflies. And that could happen with only one possible way. It should be the fast breakout of this wedge to the upside. Usually it looks like acceleration on the daily time frame, so some kind of the round bottom, and market starts to create greater and greater candles to the upside. I suppose that you have seen this on the market, such kind of price development very often. There's some kind of acceleration. For that I need the breakout of this wedge and failure of these butterflies. If this will not happen and market will fail there and continue to move to the downside, well, in this case we need to wait with entering on the long side of the market, since both trends As for our time frame, as hourly time frame will turn to the bearish side, and that will indicate the deeper retracement on the intraday charts, although probably daily trend will still remain on the bullish side. In this case, some consolidation will continue, and how it will finish, who knows. It also easily could finish with the breakout of this wedge, since this is in general the bearish pattern. After that thrusting move, we said that probably yes, market is ready to continue, but recent price action, this calling inside of this bar during almost the whole week and stands below the confluence resistance with unable to break this level, makes me think that this is the bearish pattern, and to possess ourselves, to continue to possess ourselves on the long side of the market, we need to see the failure of this pattern and acceleration to the upside. If this will not happen, this could lead either for some consolidation for some time inside of the wedge, or it even could lead to the breakout to the downside. That's why I suppose that you should protect your profit if you have it. If you do not have any position, then probably it's better to wait some more signs from the market. If they will come as the bullish strength, so the market will accelerate, then probably we could possess ourselves on the long side of the market. If not, in this case we will take a careful look on this wedge pattern. So that's our current view on the market. Well, good luck to you and protect your profit.